PayPal has announced plans to quote unquote shock the world at an upcoming innovation event where they plan to show off some as yet unknown thing that's going to apparently shake things up quite a bit. As a result of this, their stock price has bumped a solid 6% just today, and this is the best 3-day stretch that they've had in quite some time. Could this be the beginning of a shift in the momentum behind PayPal? It's been beaten down 80 plus percent from its all-time highs for quite a bit now, and has been a stock that people have declared dead on multiple occasions, while top line revenue continues to grow and they continue to produce solid free cash flows. Welcome, everyone, to the Fiscal Philosophy YouTube channel. I happen to own shares of PayPal, and when I look at their revenue chart, I don't see a dead business. I see a business that's growing, and the growth perhaps slowing a little bit in recent years, but that really doesn't surprise me. Consider the broader economic circumstances for PayPal. They experienced a pandemic bump, like a lot of other businesses. However, unlike many of those businesses that got that bump, they didn't see a large crash in their revenue afterwards once things started to reopen and normalize to an extent. Now, yes, they did have a bit of a slowdown in their growth, which is pretty much within expectation the bigger they get, but also I think the fact that they continued growing at the pace they have is pretty remarkable. In addition to their growing top line revenue, I think it's worth looking at the fact that PayPal in most years is an absolute free cash flow machine. Now, it does fluctuate here and there, but by and large, this company spits cash, okay? We're talking 5 billion or more per year in a typical year in terms of free cash flow. On a market cap of about 70 billion or so today, this means they're really not trading at a very demanding multiple of their free cash flow at all, something like 15 to 16 times. That's not that bad. It's maybe a little bit more expensive than some of the other value companies I buy, but remember, growth is an element of value. I believe that PayPal will produce greater sums of free cash flow in the future, and therefore I'm pricing that into what I'm willing to pay today. Also, I love the fact that when share prices have declined, management has allocated more and more of that free cash flow to buying back shares, reducing the shares outstanding and increasing my share of that future cash flow. In the most recent trailing 12 months, they bought back over 5% of the total shares outstanding. That's impressive, and I think it shows that management is really focused on good allocation of their capital and focused on rewarding shareholders that have stuck with the stock even though the price has dropped a lot. PayPal also boasts an exemplary balance sheet, in my opinion. So their net cash to debt is over $8 billion. This means that were PayPal to decide to pay off all of their debt, they would still be left with over $8 billion in cash. It would be very hard for a business with this rich cash position to have any real serious financial issues unless there was some kind of really large sustained shift in the market or issue with their operating costs that would cause them to burn a lot more cash than expected. But I don't really think that PayPal is in any danger of that because, again, they produce over $5 billion in free cash flow annually in most years. Another major driver of value potentially for PayPal would be more synergy between their family of brands. Their new CEO actually mentioned this on a recent earnings call that I was listening to, and I think a lot of people don't necessarily even realize how many brands are actually owned by PayPal, from Braintree to the Honey browser extension, the one that helps you find discounts and whatnot. There's Hyperwallet, Paydy, which is a payments platform solution provider in Japan. Japan being Still, I believe, the third largest economy in the world, by the way, in case anybody was wondering about that. As well as, oh, look, Venmo. Now, a big complaint I've seen about PayPal recently is, oh, well, they're not accepted on any major platforms. Well, Venmo certainly is, okay? I use Venmo pretty frequently, and it's actually linked to my Uber account. So if I order off of any of the food delivery brands that are owned by Uber, or if I, order a car to the airport or whatever, I'm doing it with my Venmo account. And I do generally think of Venmo as the gold standard for electronic wallets. For sending money to family and friends domestically, I almost always just use Venmo. However, for anything international, well, my go-to is still, in fact, PayPal Classic. Analysts' consensus on PayPal is generally a buy rating, although the price targets do differ in a pretty wide range, though I would say that all of these prices fall at least within the realm of sanity. One price being just over 100, one being in the mid 50s, with average being around $75 per share. I don't think that's terribly unreasonable for PayPal, due to how consistently PayPal spits off cash and the overall quality of the business. I'm pretty comfortable using a standard DCF model to come up with my fair value on this, applying a 12.5% discount rate, giving them credit for their exemplary balance sheet. Again, a great cash position here. Of course, if they have that much cash sitting on their balance sheet, I think it deserves some consideration in the valuation of the company, applying what I think are pretty reasonable growth levels. Nothing too crazy, but I also don't want to, kneecap them and just go to the bone. I'm already using a 12.5% discount rate, so we're already, cutting them a little bit there. So this formulation gives me a little over $75 worth of fair value. We're in line about with the analyst midpoint expectations for their price forecast. Now, if I had applied a 10% discount rate, we would have come up with a higher number than this. And my personal price target on PayPal has been 60 and below is where I'm considering adding. And that's simply because I always like a little extra margin of safety where I can get it. I run some scenarios where maybe the growth was worse than what we're talking about here, or at a higher discount rate. And so I became much more comfortable with that $60 price point, just considering some alternate scenarios that are maybe a little bit worse than what we're calculating for here. At the end of the day, I'm pretty confident that PayPal is going to be a cash flow machine for me in my value portfolio for years and years to come. And I hope that they continue doing the things that they've been doing to reward shareholders. And I hope they get even better at growing the business. Even if PayPal doesn't end up merging with X, like the random rumor that's been floating around lately, I think they can still produce really great returns for shareholders in the long run by continuing to reward shareholders with buybacks when share prices are low, drive efficiency and growth in the business, and just keep doing a good job at what they're doing. While it wouldn't bother me, of course, if I were to get a big payday and a windfall like this, I don't believe in relying on windfalls to make my profit as an investor. I'd prefer just to seek out value opportunities where I can buy companies for less than what I think that they're worth. And at the end of the day, I think that's how I'll get a good return consistently. Do you think Elon Musk has unfinished business with PayPal? Do you think he'll make a bid for the company? Do you think he'll try to merge it into his X platform? Let me know what you think about that one. I personally think that's pretty slim chances, but sort of fun to think about, the what ifs. But I'd love to hear your comments on the matter. Speaking of X, you should probably follow me there at Mr. Macho Mog. Link is in the description. Also, don't forget to subscribe to this channel, hit the notification bell, and also like the video, help me out in the algorithm. Remember to go on my Discord, link in the description there as well. We participate in detailed discussions about PayPal and other stocks on there quite frequently. We have a lot of smart people in there doing a lot of research. Take care, everyone. Have a wonderful day.